Thanks very much, Tim, and welcome to any Magnetite Mines shareholders that have joined us. Tim, would you mind just going back to that first slide? The very first one. Thank you very much. So this gives a great overview of the Razorback deposit and that we're going to work on first, and certainly shows the outcropping nature of the deposit and the potential for a very low strip ratio, which is important. So we might go through to the next slide now. So the key takeaways from this are, I think, that we've got a very staged and careful approach to the development of the project. It's a new approach. We're looking for a low capital, quick to market startup. And I think we've really connected with shareholders, and they've taken our market cap from around $4 million to, as you said, Tim, around $100 million. And we'll be grateful for that, and we intend to add a lot more value as we go forward. So we might go through to the next slide. So this is one of the key things around our project. So it's about proximity. So we're in a sovereign risk-free country, and we have really ready access to infrastructure. We're about 40 or 50 kilometres from the open access railway line that takes us to three ports actually, but two of them are already shipping iron ore. This is a key advantage for a bulk mining operation like ours, where you're shipping a lot of tonnes, and it's very rare in the world of iron ore. Most iron ore deposits are located in pretty tough environments, and a lot of infrastructure normally has to be built. So a key advantage for us. It's also interesting to note, I think, that South Australia has become a renewable energy powerhouse. And just recently, we picked up on a story where they're producing 62% of their power now from renewable sources. So it's advantageous for us to be on the grid, and it's also advantageous from a production point of view to have that connectivity to renewable power. So I'll go through to the next slide. Mark?
Thanks, Pete. We've been setting up the project for the long term, so we want obviously to operate through the cycle profitably. But it doesn't hurt that we're seeing iron ore prices at near record highs. That's a result of strong demand. So steel production in China has gone up about 25% in the last 5 years, whereas iron ore production from the majors essentially hasn't moved in the last 5 years to match. So we've got a current situation where we've got strong demand. The rest of the world is also recovering rapidly post-COVID, and we've got limited development on the iron ore side. So we've got a great market context for our project. Go to the next slide. The starting point for anything in iron ore is around the resource. So we've got a very large resource, 3.9 billion tonnes. About 1 billion tonnes of that is indicated. And it's amenable to processing to produce an exceptionally high-grade product. 68.5% would be 6.5% higher than the benchmark grade, which is 62%. There's actually only one product out of Australia which currently is sold in any volume that exceeds the 62%. So we'd be in a very small group of high-grade producers. And that resource, as Peter's shown on the picture, is outcropping and has the potential to produce economic products at very high grade. If we go to the next slide. The approach we've adopted since Pete and I have been taking the lead in the last 2 years or so is to focus on a staged development pathway that's quick to market and is efficient from a capital perspective. We are working through every aspect of the project on a systematic basis, and I'll show you that over the next few slides. However, we are moving rapidly as we move to develop the project into production. Next slide, please. So one of the things we've been able to benefit from is the ore body's been extensively drilled. And this is just a picture showing we've been able to use our library of geophysical information to identify correlations right across the deposit. So the deposit essentially is laid out like a layer cake, and that gives us some excellent insight into what's happening with mineralisation and how to look at selected mining opportunities to improve the head grade of the plant. Next slide. We are using new technology in a number of aspects of the project, both the study and potentially the development phase. We want to highlight one here, which is a revolutionary ore sorting technology called magnetic resonance ore sorting technology. This was developed by the CSIRO and has been commercialised by a company called Nextore. We're in partnership with Nextore, and we see the opportunity to apply this magnetic resonance ore sorting technology to again substantially improve our overall head grade and project economics. And we're working very much in partnership with the Nextdoor team to develop that technology. We're obviously, there's like any technology, there's a pathway we've got to follow to prove it up, but at this stage, it's looking very encouraging indeed. Next step for us is to work towards a bulk trial of the technology, so we actually test it out on the ground. If we go to the next slide, we're just starting to talk about the metallurgical investigation. So we've started with the mineralogy and basically complemented our existing core library with some test work. And so we've done some high resolution Davis tube magnetic recovery test work, which has been very helpful. One of the things we've been working with Hatch on, which has been very helpful, is some QuemScan work, which actually characterises the individual particles within the resource at a very high resolution with detailed mineralogy attaching to it. So that's been a really exciting stuff, and it's really given us some much greater confidence in terms of the way we're approaching the flowsheet design. Flowsheet design is being finalised as we speak, which is very exciting. So that's going to be that's a really key building block for the pre-feasibility study, which is currently underway. Next slide, please. In parallel to the sort of technical aspects of the operating site in terms of the mining and processing operations, we've been doing a lot of work in parallel to put in place the commercial arrangements for the access. As Pete says, we're lucky enough to have existing road, rail, power facilities that are available and we can use. So we're putting in place arrangements to access those, which is going very well. Go to the next slide. Stakeholder management is absolutely critical with any new development. We're lucky enough to be in South Australia, which is one of the more progressive jurisdictions in terms of mine developments in Australia. And we're in an area which is relatively underpopulated. However, we're being very systematic about doing all the base work required. So as one example, we did a lot of flora and fauna work about 10 years ago within the company, and we're actually updating that. So we did an autumn survey a few months ago. We've got a spring survey planned. So to make sure that we understand our impact, we understand what's in the environment and how we manage it. And we're in parallel working on all our approvals, and that's going well. So I might hand back to Pete for more of a corporate overview.
All right, next slide, please. I think this slide's up there to show that we're really making rapid progress around the technical and organisational aspects to the project. Mark and I recently announced that we've kind of, I suppose, re-emphasised our commitment to the project. We're very much a team in this, and I'm looking forward to working further with Mark as we bring the project into development. But we're particularly excited about the Mustard Dam announcement, which is just there to the left of the screen. So if you go to the next slide, I'll talk a little bit about that. So Mustard Dam is a little bit further up the Braemar, but what it offers us is some really interesting opportunities. I mean, we've picked up another 1.5 billion tonnes of iron ore, which is always helpful in an iron ore boom. But apart from that, it gives us some slightly different geology. It gives us different access to power, different access to rail. It's early stage, but we're very, very excited about the news flow that we think will emanate from Mustard Dam. The learnings we have over Razorback are going to really readily apply to Mustard Dam, and we've been very fortunate that this has come with a significant body of drilling data and particularly DTR test work. There's almost 3,000 DTR samples that we'll have access to, and we will be able to deploy those relatively quickly and cost effectively. And as I said, look out for some news flow around Mustard Dam in the future. Next slide, please. So this is a consistent slide we've had across a range of our presentations, and we're still very much on track. We're applying, as we've said all along, a systematic approach. We think that particularly processed ore projects live and breathe off the rigour that you apply to the study phases. And particularly under Mark's leadership, I think that's exactly what we're doing. And we're connecting that message with shareholders, and they're coming along with us, which is very pleasing. We're very much tracking according to this timeline, maybe a little better in some areas, and looking for first ore delivery in late 2024. Next slide, please. So just to wrap up, I guess, the big thing for me is always that we have a very, very large iron ore resource. It's going to be a long life project when it gets going. It's in a sovereign risk-free zone, which is, again, it's unique in the world of iron ore. We have open access to the rail, port and power infrastructure. As Mark said earlier, grid power is critical and key to developing a processed iron ore project. Very conventional processing and beneficiation flow sheet. We're not trying to reinvent the wheel. We're trying to keep the capital very modest, and we're trying to get to market very quickly. So we think by following that path, we've got the best chance for shareholders of developing the project in the shortest amount of time. And we have a strong belief that that study work that's underway will be transformational for the project. Last year we did a scoping study, and unfortunately, due to ASX regulations, we weren't able to publish the data from that study. But we're looking forward to sharing the study work from the PFS a little later on in the year. So I think that's the last slide, is it, Tim?
It looks that way. Thank you, gentlemen. Thank you for part 2 of the presentation. A couple of questions. Will the next ore unit be delivered prior to PFS? And if so, will the results be part of the PFS released to the market?
Great question, Tim. So the current schedule for delivery of the unit, which is actually driven by next door constraints, is later this year. So it's actually going to be outside the window of the PFS. So what we're doing is working closely with Nextdoor to actually assess, based on the lab test work, what we think the impact of the ore sorter will be in terms of our results, in terms of head grade and sorting ability. And so we're going to incorporate that as options in the pre-feasibility, and then we'll resolve as we go through the DFS the exact way to fit the ore sorter into the flow sheet. One of the advantages of an ore sorter, because it's a pre-concentration step, it doesn't actually involve load of plant modifications. Fundamentally, it's something we can just include in our system, and it gives us a sort of dynamic ability to dial up different grades from the sorter. So it's, but that's the timeline. We're looking for a bulk trial, all things going well, probably in the second half of this year.
Great, thank you. And a broader question here: logistics, metallurgy, cost of production is key as positions on the cost curve. Where do you expect to land on cost versus competitors for high-grade iron ore?
Yeah, so this is a critical one to think of, and without sounding trite, ores ain't ores. As we saw from the price graph we had before, you have a very substantial difference between the price for high-grade ore and a low-grade product. What we're targeting is we're looking at running the project so we earn an attractive rate of return at the 10-year average iron ore price. So we're very much looking at using a long-term price to guide our deliberations. And we're targeting the ability to be competitive with one of the larger Australian producers on a quality-adjusted basis. So the idea there is that our product will be more costly to produce because it's processed heavily, but it'll be high grade. And so what we're aiming at is that effectively on a quality-adjusted basis, we'll actually get the same margin as a large proportion of the Australian production, which is obviously the bottom of the cost curve. So that's our intent.
And when do you start engaging with those kind of potential offtake partners?
We've had some discussions already, both domestically and internationally. We're looking to produce a relatively small scale initially, and at pre-feas, we want to sort of lock down other aspects of the project. But we've had some very favourable reactions in terms of the potential product quality in particular. So One of the advantages we have is as a small scale producer producing a very high grade product, we're going to have a lot of choices about where we can place that material.
Yeah, Tim, I'd just like to add to that, you know, as Mark said, we'll be starting up on a fairly moderate scale, and I'm going to guard that resource that we're going to produce, the concentrate, with a very tight hand and make sure that we get the very best commercial outcome for magnetite mine shareholders that we can. And so that product is valuable. And as Mark said, it's in demand. We have a lot of inquiry over distributing, selling the product or purchasing the product. So I think we're applying that metric to offtake and our rationale around it.